Hello everyone, welcome to BISP Solutions. So BISP Solutions is a tech company that provides technical solutions across the world. So today we will be taking topic IAS 36 in fixed assets management. So first of all, our agenda covers definition, objectives, scope, key concepts, impairment testing process, flowchart summary for the impairment testing process, and scenario, then conclusion. So, first of all, what is the meaning of impairment of asset, which is in IAS 36? So, IAS 36 is an international accounting standard that outlines the procedures for ensuring that assets are not carried at more than their recoverable amount in financial statements. So, the standard aims to prevent assets from being overvalued, ensuring accurate reflection of an asset's value. Then comes our objective. So, the main objective of IAS 36 is to ensure that an entity's assets are not overstated and are carried at an amount that reflects the potential future economic benefits they are expected to generate. So this is the same as the definition covers. So this is achieved by determining when an asset should be tested for impairment, measuring impairment losses, reversing an impairment loss if there is an evidence that is no longer valid. So in crux, the objective of IAS 36 is to ensure that a company's assets are recorded at their fair value and that any decline in the value, known as impairment, is recognized promptly. So, this is important so that financial statements show a true and fair value of a company's assets. Then, scope. So, IAS 36 applies to the following types of assets. So it covers property, plant, equipment, which is PPE under IS 16. Goodwill from business combination. Goodwill is the market value of the company. Then intangible assets under IAS 38, which consist of patents, trademarks, like this. Intangible assets are there. Then investments in subsidiaries, associates, and joint venture. Then other assets like assets held for sales under IFRS 5. So, some assets are not covered by IAS 36, such as inventories, deferred tax assets, and certain financial assets, which are governed by other standards. So, some key concepts are first is impairment losses. This is the amount by which the carrying value, like for recorded book value of an asset, exceeds its recoverable amount. So, next is recoverable account. So the highest of an asset, like suppose first is fair value less cost of disposal, which is FVLCD. So the price that could be obtained from selling the assets after accounting from cost of all. Then value in use, like the present value of future cash flows expected to be generated by the asset. Then comes our cash generating units, then indicators of impairment, where events or conditions that signal a possible decrease in an asset's value. So this can be internal, for example, damage, poor performance, or repairing is needed, or external, like for example, market declines, new regulations are there. So this is indicators of impairment, which show us that our asset is now in impairment stage. Then comes reversal of impairment losses. So how can we reverse the impairment loss which we occurred from the assets which are gone to recoverable or impairment assets? So these are the key concepts of IAS 36. Then comes our impairment test process. So the impairment testing process is used to determine if the carrying value of an asset or group of assets like for cash generating unit, exceeds its recoverable amount, indicated that it may be impaired. So, first of all, we will be identifying assets or cash generating units, which is CGUS, where it determines the individual asset or group of assets that will be tested for impairment. Then comes our determining the need for an impairment test. So, we will be checking if there is any indicators of impairment, like these indicators can be internal, for example, obsolescence, damage, poor performance, which we have discussed previously also, or external, example, market declines, changes in laws, adverse economic conditions, and assets with indefinite useful life, such as goodwill, must be tested for impairment at least annually, regardless of indicators. Then comes our calculate recoverable amount. So the recoverable amount is the higher of an assets or CGUS. CGUS cash generating units. So in this calculate recoverable amount, first is fair value less cost of disposals, which we have discussed in our key concepts also. Then value in use we have discussed also. So we will be choosing the higher of FVLCD, which is fair value less cost of disposal, or VIU, which is value in use. So as the recoverable amount. Then comes our compare carrying value and recoverable amount. So comparing the assets carrying value, which is recorded in the books, with its recoverable amount. Or if the carrying amount, or if the carrying value is higher than the recoverable amount, so an impairment loss is recognized. Then comes our recognize and record impairment loss. If we have compared the carrying value and recoverable amount is higher, carrying value is higher, sorry, my mistake. Carrying value is higher than recoverable amount, so we will be getting impairment loss. So how we can recognize and record impairment losses? So we will be calculating the impairment loss as the difference between the carrying value and recoverable amount. Then we record the impairment loss in the financial statement by reducing the carrying amount of the asset and charging the loss to the income statement. Then we will be reviewing and reassess in future periods, which means in subsequent report periods, assess if there are any changes in circumstances that could reduce or eliminate the impairment loss, potentially allowing for a reversal which excludes goodwill. So any reversal cannot exceed the original carrying amount prior to impairment. So if we want to make a summary of the impairment test process we have done in our impairment test process in a brief. So if we want to summarize what we have learned, so first we have to identify CGUS, then we will be determining the need for impairment test, then we will be calculating the recoverable amount. After that, we will be comparing the carrying value and recoverable amount. So after we calculated or compared the carrying value to recoverable account amount, if there is any, if the carrying value is higher than recoverable amount, so we will be incurring the impairment loss. So how we will be recording impairment loss in income statement, and how much we will be deducting from the assets carrying value, we will be recording in impairment loss. Then we will be reassessing the assets in future periods for the same. So this is the flowchart summary of the impairment test process. Then, for example, we want to understand it clearly within scenario. So for example, a company, let's suppose ABC Manufacturing Private Limited, they have purchased assets. Let's suppose machinery they have purchases for manufacturing operations. They have recorded carrying asset carrying value of asset as 10 lakh rupees, which will be recorded in the books. This is the carrying value which we have written in our books. Then event triggering impairment test. Okay. Sorry, one second. So, what is the event which triggers the impairment of the test? So, a new technology has come. So, it reduces the demand for products made by the company, which might indicates that the machinery value is now lower. Okay, so what is the name of the company? We have made ABC Manufacturing Private Limited. What they have purchased a machinery for manufacturing operation. The carrying value is 10 lakh rupees and which is recorded in our books. So what is the event which triggers the impairment loss or impairment test to be done? A new technology has emerged which reduces the demand for the products made by the company ABC, and it might indicate the machinery's value is now lower. So how can we understand the impairment of asset? So first of all, we will be determining the recoverable amount as per the flowchart we have understood. So first we have understood that FVLCD, which is fair value less cost of disposal. So the amount of ABC could sell the machinery for the market after selling cost. Okay. And value in use, the present value of the future cash flows that are the machinery is expected to generate. Okay. So next we will be calculating FVLCD. So after checking the market, ABC estimated its cost that they might sell their machinery at the cost of 6,60,000. Or let's suppose for a calculation we are taking it as 6 lakh. So selling cost will be 50,000 rupees. Now fair value will be 6 lakh minus 50,000, which equals to 5,50,000. So this is the amount FVLCD. Then comes our VIU, which is value in use. We have to calculate this also. So ABC expects the machinery to generate 2 lakh in cash flow each year for the next 3 years. So if the selling value is 6 lakhs, so value in use we can determine as 2 lakhs each for 3 years. So if we provide a disc, we will be using asset 2 lakh rupees for 3 years with discount rate is equals to 10%. Then if we want to calculate it for the same, so in our first year 2 lakh rupees for 10%, which will be coming to we will be doing it on the discounting rate we will be calculating it for. So it will be coming to our 1,81,000 rupees. So how come is possible? So what we are doing, 2 lakh rupees divided by 1 plus R upon 100, which we have learned in our previous classes. So it will cost us around like this, and to the power 1, because we are calculating it for first year. Then second year, again 2 lakh, again the same 1 plus 0 1 0, and now the power becomes 2. So it will give us the value like 1,65,289 rupees. Then third year, again 2 lakh, again 1 plus 0.10 to the power 3. So the value comes as 1,50,264 rupees. So value in use in these 3 years now decreased to 1,50,264 rupees. So if we wanted to calculate total VIU, so we have to calculate for 1,81,000, then 1,50,264, which gives us total as 4,97,000 371. So what was the FVLC? It was 5,50,000. Total VIU, which is value in use, is 4,97,371. So the value is decreased. Then comes our so now we will be determining the recoverable amount. So if the FVLC D is higher than VIU, so 5,50,000 is the recoverable amount in this case. Then comparing carrying value and recoverable value. So carrying value is 10 lakh. Recoverable value is 5,50,000 rupees. So carrying value is higher than recoverable value. So this is the condition of impairment loss. So if we want to calculate and record impairment losses, so for that we have to calculate CV and RV, which we have calculated above. So it makes 4,50,000. So the impairment loss for ABC company is to be calculated as 4,50,000 in income statement and reduce their assets carrying amount to 5,50,000. So this is how we can calculate impairment of assets more logically and more effectively. So IAS 36 helps companies ensure what they have to do, not to overstate the value of assets on their financial statements. So, by recognizing impairment losses, companies provide a realistic view of their financial health to stakeholders, which is crucial for accurate reporting and decision making. And also, IAS 36 ensures that the assets are not overvalued and that any decrease in value are recorded properly. So this promotes transparency and accuracy in financial reporting, which help companies maintain reali- reliable, reliable and realistic valuations of their assets. So thank you for watching. I hope this session provided valuable insights into IS 36. If you have any questions or would like further details, feel free to reach out. Don't forget to check out our other tutorials. See you in the next video.